Hey there, this is Stephon Smith with StephonSmithFX.com. In this video, I want to talk about a very interesting situation that's occurring in the FOMC meetings. The members of the FOMC have started planning on and they started planning and started discussions on how to normalize monetary policy for the Fed. Now that tells a very interesting tale, because that is saying that the Fed is seeing the economy of the United States and saying, things are getting better. We may not necessarily need to maintain this expansionary monetary policy stance. As the United States economy improves over time, we may be able to normalize our monetary policy. So the Fed is showing their optimism in the United States economy, which is a good thing. That's telling the world that the United States has made it through the rough patches of its recovery, and it's starting to reach levels pre-crisis, pre-2007, 2008 crisis. And the discussions are starting to arise in the meetings. They're starting to consider that maybe we don't need to be as accommodative as we are now, or at least in the future. We may not need to maintain such an expansionary policy or policies. So the Federal Reserve wants to normalize monetary policy, but how do they plan to do that? They have a bunch of tools at their disposal, so it's going to be interesting as to how they go about doing that. Now, according to the minutes, they said that they are considering, or they are thinking about, simply raising interest rates, raising the federal funds rate as the first procedure for normalization. Because at the current moment, at today's October 8th, 2014, currently the federal funds rate is around 0 to 0.25%. That is very low, and it's unusually low for the Fed. So the Fed wants to go ahead and start increasing the interest rates so that it can be more in line with how it used to be. It could be more normal, because at the moment it's abnormal. And another strategy that was discussed at the FOMC meetings was, I want to make sure I'm correct here, the Fed also wants to start reducing its holdings in securities. Now, during the 2007-2008 financial crisis, one of the strategies that the Fed took advantage of was quantitative easing, because when the financial markets are in turmoil and the economy is tanking, one of the strategies that central banks use is that they start infusing the economy with money. They just start printing money, or they'll create it digitally, or however they create their money, which is another discussion in itself. But they create the money and they infuse it into the economy. So that's one way that they grease the wheels. Now, fast forward to today, and you'll see that they are actually considering selling off their securities. They're starting to reduce the amount of securities that they have in their portfolio, which is almost like quantitative tightening or quantitative hardening, since it's easing, hardening. Anyway, it's a very bullish move when it comes to the dollar's valuation. Within the minutes, it also said that they would take that action. They would take the quantitative tightening action only after they have raised the federal funds rate. So when the normalization of monetary policy starts, you will see first the federal funds rate start inching up. And then after that, you'll start seeing other things like them selling off their securities so that they could decrease the amount of assets they have on their balance sheet. So those are the two methods that the Fed plans to use to return monetary policy back to normal. Now, what will happen to the United States dollar in the midst of all these policy changes? It depends on the intensity at which these policies are implemented, and it depends on what other central banks around the world are doing. But if I had to give my opinion on what the dollar would do, the dollar would undoubtedly increase in valuation relative to other currencies. The price of the dollar would increase relative to almost anything. Stocks would most likely fall to some degree. It depends on how, like I said, it depends on how intensely the Federal Reserve implements the normalization procedures. Okay, so that concludes this report. The Federal Reserve pretty much has an optimistic point of view of the United States economy, to the point that they are planning to tighten the policies that they're implementing, which is a good thing. So it just means that the United States economy is gradually improving over time. All right, so I'm Stefan Smith with StefanSmithFX.com. I'll talk to you later.